Radio, Liberty Talk Radio, where the critical thinking will defrag your mind of propaganda-ridden viruses induced by mass media news programming. No BS here, just the facts.
And now we present to you America's quintessential iconoclastic anomaly. Wow. In Talk Radio, your host, Joe Cristiano.
Welcome, everyone, to Liberty Talk Radio. I'm your host, Joe Cristiano. Our guest today is legendary investor Rick Rule, with nearly 40 years of experience in the natural resource arena. Mr. Rule is chairman and founder of Sprott U.S. Holdings and president of Sprott Asset Management USA, which manages over $1 billion in assets, and through the acquisition is part of, $7 or $10 billion now, Sprott Asset Management LP. Rick, thank you so much for being our program and taking your time to be with us.
A pleasure to be with you, Joe. Thank you for having me.
Thank you, Rick. I'm gonna start with an open focus question. It's gonna be a little convoluted, but it'll encompass everything, and you can take it from there. With the worldwide turmoil, and we're talking everything from Greek default to the Al Qaeda, Arab Peninsula situation in Yemen, deflationary worldwide pressures. Worldwide quantitative easing, poor economic performance in the United States, and I can just go on for a half hour. Why are precious metals so depressed in an arena that it should see it skyrocketing right through the stratosphere? I'm frustrated, by the way.
Well, I think, ironically, Joe, there is good news and bad news, and I don't want to offer up a long-winded answer, but at the same time that there are all sorts of difficulties foisted on us by the collective, the free markets have delivered amazing prosperity. If you think about the fact that you and I are able to have this interview for free over Skype, and it can be watched by people in rural Uganda, if you think about the fact that the percentage of household budgets devoted to food has fallen by 60% in your and my lifetime. That's right. If you think about what might have been as opposed to what is as a consequence of the financial crisis of 2008, you can understand that there's both good and bad news. I think the second part of this, Joe, is that unfortunately the events of 2008, which I think were the result of government interference in the market, were addressed by more government interference in the market.
Right.
And the truth is that many people believe that the big thinkers of the world, the Obamas, the Yellens, the Merkels, the Carneys, stick-handled in Canadian parlance our way through those difficulties. And there's enormous faith, unfortunately, in the political system to solve our economic problems. The second circumstance is that many people are nervous about the level of the equities market. And one consequence of that is that they have crowded confident in government into the bond trade. Joe, there's over $4 trillion in sovereign debt worldwide that trades at a negative real yield. We call this return-free risk.
Right.
And that's an example, I think, of the fact that the collective, unfortunately, enjoys worldwide hegemony. I don't think that this is necessarily going to have a happy ending. And Joe, I think you're going to be right, or maybe I fear you're going to be right, because the set of circumstances that causes precious metals prices to go up, particularly if they go dramatically up, is invariably very unpleasant.
Right. Well, the price of gold and silver has been relatively depressed in U.S. dollars, but not so much in other currencies, especially the euro. What do you attribute that to?
That's a very good point. Gold has done its job for investors and savers in every currency except the U.S. dollar. It's been in a global bull market for 14 months, just not one that you and I would notice.
Right.
And I think the hegemony accorded the U.S. dollar is due to several factors. One, as strangely as the United States is run politically, it's run better than other places. Doug Casey describes the U.S. dollar as the prettiest mare at the slaughterhouse. And this hegemony, I think, goes not so much to the strength of the dollar necessarily, but as to the weakness of the competitors. To quote Doug Casey again, the dollar, of course, is an IOU nothing.
Right.
But the euro then is a who owes you nothing.
I like that. Yes.
It seems that although Americans aren't used to losing, we're losing the race to the bottom. Although I know our competitive nature, unfortunately, I'm fairly certain that we will catch up. You know, Joe, if you dial the clock back 15 years ago to 2000, we were in a very similar situation. The gold was priced at $250 an ounce.
Right.
I had to write a letter to my customers called A Case for Gold, not the case for gold. And the situation was similar. Gold was doing well in currencies except the US dollar because the US dollar was so strong.
Right.
Gold began to rise simultaneously with the US dollar, and then the US dollar rolled over. And that sentiment in 2000, which resembles to me the sentiment we're seeing in 2015, was the condition precedent for a move in gold from $252 an ounce to $1,900 an ounce.
Right.
I'm not saying that a move in that magnitude is in the offing, but I suspect that the tailwinds are behind gold, not the headwinds in front of it.
Yeah. Well, it seems now in $2,000, the price of silver and gold is very attractive, and we're almost in the same position as we were back then, and yet the sentiment is about the same. Like, why would you want to own something like that? I mean, it's not doing well. You actually can lose money. Steer away from it. It seems that we have the same mentality 15 to 17 years after the fact, and we're repeating that again, but no one learns from history. And I'm very bullish on gold and silver now. I think this is the time to buy. But when I mention that to my other friends who are pretty heavy investors, they think I have totally lost my mind.
Well, I think that history will likely, unfortunately, prove you right. You know, it's important, I think, to divide the discussion into a gold discussion and a silver discussion. Gold traditionally has had a value as a medium of exchange that was simultaneously a store of value. It wasn't a promise to pay. It constituted payment in and of itself. And that meant for thousands of years, across thousands of cultures, gold served a function really as a financial insurance product.
Right.
And I think it's instructive, Joe, for your listeners to focus on that. Because although you sleep nights and stay calm with gold, the set of circumstances that causes you to get paid on any insurance premium are always unpleasant. Life insurance presupposes that somebody died. Auto insurance presupposes either a theft or an accident. And when I talk to clients of mine that are sort of rubbing their hands with glee in anticipation of $4,000 or $5,000 gold, I caution them, be very careful what you wish for.
Right.
Of course, if a bad incident in any regard happens, you'd like to be insured. Just be very cautious about the nature of the incident that you wish for.
Yeah, but with this morning, I read in the Wall Street Journal that the Russian central bank has lowered its interest rate to 12.5%. Now, it seems to me that Russia is doing the right thing in raising interest rates to control their currency and whatever. We do the exact opposite. We're in negative interest rate territory. Why the divergence in this philosophy of interest rates when zero interest rates has never proven out to foster any sort of economic resurgence and activity?
The Russian government doesn't have the power to steal from its savers. The U.S. government, as a consequence of the underlying strength of our economy relative to the Russians, has the ability to steal from our savers. I was able to listen to Dr. Alan Greenspan at the New Orleans Investment Conference last October, and he said a couple of things that put this precise discussion in context, Joe. He said that a strong dollar and a representative democracy were incompatible with each other because spenders outnumbered savers, and spenders would always vote for benefits and low interest. Right. And the strong dollar was only in the interest of savers. And there was a shortage of savers relative to spenders.
I see.
In a representative democracy, which I found to be a very useful insight.
Do you think that the price of gold will follow somewhat the recovery in the price of crude oil? Will there be any correlation?
I don't see any necessary causal connection between the two. I think what we saw in the oil markets was different. We simply saw that markets work. We had 8 or 10 years of very strong oil prices, and those very strong oil prices brought about a surge in investment and a surge in technology that amazingly doubled U.S. supply, doubled supply in the most over-drilled piece of real estate on the planet. At the same time, those very high real prices for crude oil encouraged substitution. If you increase supply and you reduce demand, a fairly obvious thing happens. And I don't see them as being necessarily connected to the gold price. I see the gold price really being locked in a war with the US dollar. And I don't necessarily see gold winning that war. I just see it losing less badly.
Okay.
We estimate that less than 1/3 of 1% of investable assets in retail hands in the United States are precious metals, gold, silver, or platinum and palladium. The high, as we understand it, for the percentage of ownership of precious metals in U.S. accounts was 9% in 1980.
I see.
So basically, the percentage of gold and silver held in private accounts has fallen about 30-fold in 30 years. We aren't expecting a return to 9%, but we are expecting a return to 1%. And my suspicion is that a return in the allocation to precious metals of 1% just in the United States would make a very large difference in gold and silver prices. And to make you feel a little better, Joe, you will note, as I'm sure that you have, in places that have traditional cultural affinity to precious metals, places like China and India, as they become slowly more free, and as the citizens are allowed to own precious metals, and as the infrastructure to deliver precious metals to citizens becomes built out, the ownership by private parties rather than by governments of precious metals is increasing. So time, I believe, is on your side.
I think we have a caller on line one. All right. Rick, can we take a call at this time?
With pleasure.
Okay, fine. Line one, please. We didn't lose them, did we? We got them. Okay. Caller, you're on the air. Your first name, please.
My name is Jim.
Jim, thank you for calling in. Your question for Mr. Rule, please.
Thank you. First of all, Mr. Rule, it's an honor and privilege to hear and see you this morning. You're looking great this morning. Can't quite say the same for Mr. Cristiano, but I did have a question to ask you. As Mr. Rule, as a precious metals investor, coins and bullion obviously are the real deal. But investors in ETFs, mining companies, royalty companies, or foreign vault storage, those options become a little bit more complicated. Could you briefly comment on these different types of precious metals investments, and perhaps how your company, the investments that your company offers, compare or differentiate from others?
Well, I'm guilty of all charges. I own precious metals in various forms. When I was a younger man, I was particularly interested in physical possession of precious metals, both gold and silver. And I will admit that I still own some physical gold and silver. As I have matured and as the technology has become better, I prefer to hold most of my gold and silver in the form of exchange-traded trusts. You know, if you go to buy modest amounts of precious metals, you go to a coin dealer or a bullion dealer, you don't pay spot. You pay spot plus 3.5% or spot plus 4% when you buy it. And you do the same with when you sell it. And then you got to pay for storage, and then you got to pay for insurance. I own most of mine. This will sound like an unabashed commercial, which I guess it is. I own most of my precious metals in the form of shares in the Sprott Physical Gold Trust and the Sprott Physical Silver Trust. They trade on the New York Stock Exchange. It costs me 0.25% to buy. It costs me 0.25% to sell. I don't have to store it, and I don't have to insure it. But that's a personal matter. Let me say one more thing about physical gold and silver, though. Many of my clients who want physical ownership and don't trust financial institutions store their metal at home. They are what we call midnight gardeners. I really urge against this. I have two clients that, as a consequence of their practice of midnight gardening, had visitors of the type that they wouldn't normally invite over for lunch. They found themselves on the wrong side of guns. Mercifully, nothing bad happened. But be very careful exchanging the risks of fiat currency for the risk to your physical person with the home ownership of physical gold and silver, please.
I appreciate that advice, and I've heard good things about your investment options through some of the Stansberry and Casey newsletters, and appreciate your advice. Thanks so much.
Thanks for the call.
Thank you, Jim. Appreciate your calling in. The establishment of the Asian Infrastructure Investment Bank has sort of unnerved the U.S. and the World Bank and the IMF. Is there any direct or indirect effect of this bank on the price of gold and precious metals?
I don't think so. I think, if anything, the bank might be a slight negative for precious metals in the sense that it reduces the systematic risk in the global economy by reducing U.S. hegemony of financial institutions.
Right.
The countries that are dominated by savers as opposed to spenders, in particular China, understandably would like a role in discussing the nature of the expenditures that they're financing. The Chinese now, by their estimation, hold $1.2 trillion in U.S. treasuries. And the Chinese have said, tongue-in-cheek, that they would have expected the United States to be a little bit more polite with their larger lender. And I think the bank that you describe is simply a manifestation of the fact that the level of debt in U.S. society and the level of expenditure relative to our aggregate savings is testimony to what will be our decreasing importance in the world and the need that the rest of the world has to establish multilateral organizations that aren't controlled by a declining superpower.
Well, we have a shift somewhere in the vicinity. I think it's less than 60% of the trade now is conducted using the petrodollar and is waning. There's more breakaways, more people, more countries are trading using their proprietary currencies when before they were compelled, I'll use the word compelled, to use the U.S. dollar. As this situation erodes the way it is, and the U.S. dollar becomes, let's say, even less than 50% of the trade, don't you see a removal of the U.S. dollar as the world's reserve currency? And wouldn't that have literally catastrophic effects on our economy with all of the U.S. dollar reserves coming back to the United States and us enjoying a $26 loaf of bread?
I believe that the U.S. dollar will retain its hegemony as the principal medium of exchange in the world for a substantial period of time, because I don't see a viable competitor. I have been able to have the good fortune to talk to some of the people involved in the allocation of assets in a couple of Far Eastern countries. And I pointed out to them the odd arithmetic associated with U.S. Treasury securities. And what they said, and I described the U.S. 10-year Treasury as an example, as a lie, basically return-free risk. And my counterparty smiled at me and said, yes, Mr. Rule, but a transparent and liquid lie, unlike the other lies that are offered up to us.
Yeah.
And so I suspect that while we are not trustworthy counterparties, we're more trustworthy as counterparties than most of our competition are. In other words, we're the best of the bad lot. Now, Joe, I don't want to discourage that line of thinking, because what you've seen in the last 18 months is an increase in the purchasing power of the U.S. dollar relative to competing currencies of about 22%. And I believe that that is either ending or coming to an end. And as I said at the beginning of this discussion, I don't think that gold will win the war against the U.S. dollar. And I don't think it needs to. I think it needs to lose it a little less badly.
Okay.
And I think that that is already beginning to occur.
Yeah, so we're seeing this slight resurgence in the price of precious metals. You think this will continue then? You think this is now a trend, or is this just another blip on the chart?
I think this is a trend, and I think it's a trend for reasons that will be easy for Americans to understand. The worldwide benchmark investment and savings instrument is the U.S. 10-year Treasury. It's the instrument that all other instruments are priced against. And so let's look at the U.S. 10-year Treasury as a competition for gold. The U.S. 10-year Treasury, the last time I looked, yielded about 1.8%. Stated U.S. inflation is at 1.6%. So the explicit promise of the U.S. government is that they absolutely positively guarantee you 20 basis points a year for 10 years. Now, on the face of it, that's not a very good deal. You give them $100,000, they give you back $100,000 10 years from now. The obvious problem with that thesis is I already have my $100,000. Why would I go through that trade to get what I have?
Right.
But a much more pernicious interpretation is that the CPI stated rate of inflation is an artificial construct of people who don't shop where you shop and don't shop where I shop.
That is correct.
In particular, Joe, and this drives me crazy, as you can see, the CPI, which is allegedly the cost of living, doesn't include tax. Now, if I personally didn't have to pay the tax, I swear to you, I wouldn't complain so vociferously about the index. But the truth is that it's a component of my cost of living. And so if you look at the U.S. 10-year Treasury through that lens, they're paying you 1.8 in a currency where your purchasing power is declining by 4 or 5% a year.
Right.
In other words, you give them $100,000 and they give you back $80,000.
Right.
And that's the competition for gold. Let's take it further. 7 years ago, if I was on your show, I would say that there was a holding cost associated with owning gold, precisely because the avoided interest from not owning the U.S. 10-year Treasury was 6.5%. In other words, every year that you own gold, if gold didn't go up, you were 6.5% poorer.
That's correct.
The avoided cost of holding gold now is almost non-existent.
Right.
One final illustration, Joe. On my way to work here to talk to you this morning, I drove past a Motel 6. Motel 6 is called Motel 6 because when you and I had hair, a room at Motel 6 was $6.
I remember. Believe me, I remember those
The sign that
days.
I drove by said Motel 6, $69.95.
Right.
Now, there's only two explanations for this, Joe. One is that the utility of a room at Motel 6 has increased 11-fold in 30 years. But the rooms are the same size. I suspect the sheets are the same.
Right.
The only other explanation is that the denominator, the U.S. dollar, has lost 95% of its purchasing power in 30 years. So really, that is an illustration of the the lack of prudence in owning the U.S. 10-year Treasury relative to gold. In 1980, well, let's go further back. In 1970, an ounce of gold would buy 6 room nights at Motel 6. Today, in 2015, an ounce of gold will buy 15 room nights at Motel 6.
Right.
Gold has held its purchasing power over time. In fact, has escalated its purchasing power over time. And it is precisely because of that arithmetic, Joe, not dogma. It's precisely because of the arithmetic that I think that gold will do well, or at least relatively well, relative to other instruments that are surpassing it today.
Okay. Do we have a caller? I thought we had another caller.
But we have some callers, but no one's wanting.
No. Oh, okay. We have a bunch of people on the board, but no one's pressed. Oh, I want to mention to everyone, if you want to ask Mr. Rule a question or make your comment on the air, please dial 1 or press 1, and we'll know you want to do so, or else we'll just have your telephone number on the board, and we won't know what your intentions are. So press 1 if you want to ask a question or make a comment, please. Recently, J.P. Morgan Chase has put out an edict disallowing their safe deposit owners of storing paper money or even currency or gold or silver in safe deposit boxes. What's your take on that? What's their logic behind that? And what right do they have to tell me what I can put in my safe deposit box? And before I get really angry, answer the question.
Well, I guess as a private provider of goods and services, they have the right contractually to restrict your use of their facilities.
Right.
I think it's stupid, and I suspect that if that trait becomes more widespread among global financial institutions, that Sprott will go into the depository business. We would love your business, Joe.
Yeah. Okay.
If there are no other facilities available in your city, call me. And I'll build one, and I'll charge you for it.
Okay.
And you can put anything legal in there. It amuses me that they do try to constrict the storage and ownership of safe legal goods in their facility. But I think that's probably market stupidity. I suspect, with regards to currency, that they are nervous about being prosecuted as an accessory to money laundering or something like that. If you go back many years, there were a few instances in the 70s when gold ownership was illegal in the United States of Americans going to Canada, renting safe deposit boxes and putting a lot of gold in there, and putting a lot of gold in a safe deposit box that was built to house passports and wills and light things. And the sheer weight of the gold in some of these depositories caused the safe deposit boxes to collapse.
Oh, gosh.
So if you had said that J.P. Morgan Chase was going to put weight limits on boxes which constrained the ownership of gold, I would understand for physical reasons. But the idea that they would constrain the high-priced rental of their property for the storage of legal goods baffles the mind.
You would think that banks don't have the best of reputations, and you would think by announcing this would add fuel to that. That would add credence that you really can't trust the bank. And one thing I would love to do. I'm just dying to take a $1 bill, just one $1 bill, and put it in each one of those safe deposit boxes just for spite, and they can have it if they find it. How would they even know I have a $1 bill in there? I mean, they would have to investigate it. They wouldn't know it. I mean, it's not orderable.
I think that's a very good idea, Joe. Remember that if you do it 3 times, it's a pattern of conduct, and you'll be guilty of racketeering.
Oh, okay. All right, we have a caller? All right, we have a caller on the air. Rick, can we take another call, please?
Of course.
Okay.
Delighted.
Caller, you're on the air. Your first name, please.
Hi, this is Patricia.
Patricia, thank you for calling.
Hello?
Hello.
Hi. My question, I understand, Mr. Rule's explanation about why having large amounts of a weighty substance in a safe deposit box might not be a good idea. But what is the basis of the restriction against having actual currency? And I heard you talking about putting a $1 bill in there, but I don't understand why that is being restricted. That seems like quite an infringement on our rights. And I'll take my answer off the air. Thank you.
Good point. Very good, Patricia. Thank you very much.
I think the caller should be on the board of directors of J.P. Morgan Chase and should be a congressman. I see absolutely no reason to restrict the storage of legal goods. Believe me, if this became widespread, as I say, I think the correct market response would be for us to build a depository.
Right. Well, if that was ever taken to court, there would be a case. The bank would have absolutely no logic from which the $1 bill when they safe deposit box, what's the recourse? Would they take the $1 bill away from me, or they just say, I'm sorry, you'll have to take your business someplace else, which would be really stupid because they charge me an arm and a leg for it. And it doesn't seem to make any sense on any level whatsoever, no matter which way you're coming from.
If I wasn't gainfully employed, it would be amusing now to bring an action against J.P. Morgan Chase, saying that they have a legal obligation in the United States to accept legal tender for goods and services, and that they were acting in a way that was deleterious to the to commerce in the country. I wouldn't do that sort of thing, but it amuses me to think about the defense that they might offer up in court for refusing to store legal tender, American legal tender.
Right. Yeah, an addendum to that, they are now refusing to accept cash at their banks in payment of their credit cards. I mean, they will not take cash. You cannot. You have to pay via some sort of bank transfer or using another credit card or whatever, I think you can write a check, but they will not take actual cash. When I read that, I said, well, I got to stop reading this because I'm sure I've lost my mind. Rick, we need to stop for a break. Could we just break for about a minute and a half? Okay, would you stay with us?
Yes, sir.
Okay, thank you very much. All right, we'll take a break, folks. Don't go away.
You're listening to Liberty Talk Radio. Political talk derived from a historical perspective. Not always palatable, but good food for thought. Pure libertarian talk with host Joe Cristiano. LibertyTalkRadio.com.
Express Test is your go-to company for on-site occupational health testing services. That's right, we said on-site. That means we will meet you at your facility for a free health and occupational safety consultation. Express Test specializes in hearing conservation, respiratory protection, and employee safety. We can help you establish viable programs tailored to your business and employee needs. For your free consultation, call 918-743-2929 or visit us at expresstest.com. That's 918-743-2929 or expresstest.com. Do you find yourself asking, what did you say? Aaron Cristiano of Ranch Acres Audiology has over 25 years of experience helping patients just like you.
Hearing requires conservation. We need to be aware and we need to be responsible for our own hearing health.
Understand more with a little help from Ranch Acres Audiology. Call 918-749-7711. That's 918-749-7711 to learn more. We'd like to thank Attorney Constance Squires for her support of Liberty Talk Radio. If you want a comprehensive way to affordably avoid legal issues, call Constance Squires. For a free consultation, call 918-254-9283 or go online at isthyWillDone.com.
This isn't your typical talk radio show. This is Liberty Talk Radio.
Okay, we're back. The Liberty Talk Radio. I'm your host, Joe Cristiano. We have Rick Rule on both sides of the fence right now. Very good. Rick, we had a double picture of you. All right, we're trying to square that away. There we go. We're back again. With us today, we're pleased to have as our guest Rick Rule. He has nearly 40 years of natural resource investment experience. He's the chairman and founder of Sprott U.S. Holdings and president of Sprott Asset Management USA. And we're pleased to have him on our program today talking about the general condition of U.S. monetary situation, the world monetary situation, how it affects the precious metals arena. With all of these currencies that are coming out now, similarly the bitcoins and these electronic currencies, I read somewhere, and I cannot reference exactly where I read it. I wish I could. I just can't remember. But there seems to be a move away in the United States away from paper currencies and a move toward a total electronic system, which gets me kind of nervous, because once you have an electronic system, that means every dime that every penny that you spend can be traced. And so anytime you do something, it is traced. Once it's traced, it is taxed. And so you really can never have money of your own. It's always in the public arena. Do you know anything about that? Have you heard anything about that and where that may be going?
Well, certainly the phenomenon that you described is true. And I certainly think electronic transmission of mediums of exchange is convenient, but I also certainly agree with you that any privacy with regards to your transactions or with regards to your wealth is being eroded steadily. The attempts by central authorities to control the medium of exchange are ancient. And mercifully, the market always seems eventually to outfox the central authorities. And one thing that I think will continue to develop are alternative currencies, like Bitcoin, as an example. And also the private ownership of transferable wealth like gold and silver. It is healthy for the citizens, not healthy necessarily for the government, but healthy for the citizens to have competing mediums of exchange. Right. Just like it's healthy for us to have several dry cleaners competing for our business, or several banks, one of whom might be willing to store legal tender.
Right.
Having competing mediums of exchange suits your interest and suits my interest. I suspect that all the phenomenon that you described today are understandable in the context of the voraciousness of the beast, the need that the government has to tax. I suspect that the lack of willingness of JP Morgan Chase to hold cash will be because they are afraid of some FinCEN action that would see their facilitating the storage of tax as being akin to aiding in money laundering. Yeah. And this whole sense of documented electronic exchange and the replacement of cash for a more documentable medium of exchange makes perfect sense from the government's perspective, and not very much sense at all from the perspective of you and I.
Yeah, another common economist that I follow is Peter Schiff. I follow him pretty closely, and he makes a good point, and I'm on this side of the fence with him, in that the United States can never raise interest rates because we just simply can't afford it. We're just too heavily in debt. Russia can raise interest rates because their debt to GDP is like 1/3 ours, and they're in that regard, they're in much better shape than we are, where we are like 115% or something like that debt to GDP. Raising interest rates would be catastrophic. And Yellen always alludes to the fact of whether or not they have intentions, they're thinking about it, and they're, whatever. They use the words, and then they play with the words. Every time they change the words around them, the market goes nuts. Are you on that side of the fence that the United States really can't raise interest rates? Oh, they can probably do it 10 basis points or something like that, but not truly raise interest rates to where they really should be, thus spelling a real problem for the economy long term, because you can't have an economy effectively with zero interest rates forever.
I think it will be very difficult for them to raise interest rates for two reasons. One, the aggregate government debt, federal, state, and local, is enormous. And the part of the budget which goes to debt service constrains expenditures that they would rather make. The other part of that, though, that I think Peter misses is that our government does what it does because it can, and the Russian government does what it does because it has to. If the Russians were able to raise aggregate indebtedness to 120% of GDP, they do it in a nanosecond. But nobody will give them the money.
Yeah, I see. Okay.
You and I, fortunately and unfortunately, live in what is, despite its faults, the freest and most innovative culture in the world. And our government has the extraordinary good fortune of controlling chattel, that is you and I, with enormous earnings potential. And the consequence of that is that they're able to do a myriad of stupid things that other governments can only dream of.
That's a good way of putting it.
It really is perverse. It's like a bank refusing to overcharge you for the storage of legal currency. If it wasn't occurring, you would think it was bad fiction.
Well, this does not give me a warm and fuzzy, that, at this point.
That's above my pay grade, Joe.
China had recently announced that it would soon, whatever that term means, soon divulge its actual holdings of physical gold. And where do you, first of all, why they haven't thus far, and how does that serve them, and what do you think the outcome of that will be?
I think that the Chinese are very concerned and covetous of soft power. And I think that the Chinese need to and will raise their status in global organizations. And one of the ways that they will do that is by showing themselves to be, in addition to the largest holder of U.S. government securities, the second largest holder of gold on the planet.
Right.
There is increasingly, if you monitor the will of the Chinese intelligentsia, at least as expressed in internet forums, questioning on the part of the Chinese citizenry as to why, on their behalf, the Chinese government holds between $1.2 and $1.3 trillion in U.S. government securities. And there is a broad expression in these same discussions that reflects the traditional affinity the Chinese people have for gold. And I think that one of the reasons why you will see the center in China divulge the fact that their gold holdings have increased absolutely and also increased relative to their holdings of U.S. Treasury is because increasingly they have to be responsive to the newly emergent middle class and the newly emergent wealthy class in China, who are politely but are expressing their opinions publicly and would like to see the percentage of central holdings in gold increase.
If the percentage of holdings in China exceeds that of the United States, do we see possibly a transference from the dollar losing its position as the world's reserve currency? You think that would have an effect on that?
I don't think so. I'm not trying to say that the U.S. won't lose its hegemony, but the transparency of U.S. debt markets and the transparency of both corporate balance sheet and government balance sheet in the United States, and the very liquidity of the U.S. government debt market and the U.S. dollar tells me that for 20 or 30 years, the U.S. dollar will still be the world's reserve currency and will still be the primary medium of exchange on a global basis. The limited experience that Sprott has in Asia is that while those sovereign governments in Asia don't really trust us, they trust us more than they trust each other.
Right.
And once again, we're damned by being the prettiest mare at the slaughterhouse.
Yeah. Well, Jim Ricketts, in his latest book, The Death of Money, suggests that the new currency, the world's reserve currency, would be something like special drawing rights and replacing the U.S. currency. Because, I remember I was in Italy back in 1960, and I did not know this at the time. I was very young at the time, and I was there, and I actually met John F. Kennedy there. I met Jack Kennedy. I was at the Royal Hotel in Naples, and I was on the first floor, and I'm oblivious. Believe me, I was the goofiest kid in the world. I just did things, and whatever happened. And I'm standing there, and all of a sudden this car pulls up, and there's a man standing in the back, and it happens to be Jack Kennedy. I didn't even know he was going to be there. This is how dense I was. And I look at him, and I yell out, "Hey, Jack." And he looked at me, and he waved to me, and I waved back. And the reason why I tell you that story is that at that time, the United States was so loved. I mean, all you had to do was say, if you got a speeding ticket and said Jack Kennedy, they'd rip the ticket up. I mean, this is how much they just enamored with the whole United States and Jack Kennedy and all that. Today, we seem to be the flip-flop of that. I mean, you mentioned the United States, it's almost like starting a fight, because of the imposition of the United States on other currencies. And it seems that we've taken advantage of a very, very good situation, and it's turned against us. Why would not other countries want to divest themselves of the U.S. currency and go through a sort of a worldwide bank currency?
I suspect, again, because as little as they trust us more than they trust each other. I agree with your main thesis that the diminishment of the American franchise during your life and mine is probably the greatest tragedy that the U.S. has faced during that period of time. I would, however, draw your listeners' attention, at least those listeners who don't travel as much as you and I, to the fact that most people in foreign countries are able to distinguish between American people and the American government. Sprott invests in or has operations in over 100 countries worldwide, and the consequence of that is that I travel very frequently. And I have to say still that my American nationality is viewed as an asset rather than a liability in countries around the world. I had occasion 10 or 12 years ago to be in Syria and in far eastern Syria, where the real conflicts are now. And I had occasion, accidentally really, to find myself struck in a traffic jam that was a consequence of a demonstration, a largely anti-American demonstration. And there were people surging around the car looking in. I pretty obviously wasn't Arab. Decided to roll down the window before it got broken. And the response was very amusing. A person said in reasonably good English, "Where are you from?" I said, "America." And he said, "What are you doing here?" I said, "Oh, well, I'm investing here." And he says, "Well, you can't do that." And I said, "Oh, really? Why can't I?" He said, "Well, your president doesn't like us." And I said, "Well, I don't like our president." And he said, "Well, I don't like your president either." And I turned around and asked him, "Do you like your president?" And everybody started laughing.
Oh, that's great.
The biggest risk, Joe, that I was confronted with in that anti-American demonstration was that my Syrian hosts would give me too much tea and too many figs. People around the world are absolutely capable of making a human connection with Americans and still admire America.
Right.
They don't admire what we do as a collective.
Right.
You know, you don't make
I see.
people's friends by murdering their sons.
Right. Yeah. Well, we seem to have, we're in this groove where if there is some sort of anomaly in another country, we feel that we have the right as the world's policeman, which drives me nuts, that statement every time I hear it, to deliver a drone over a sovereign nation, drop a cluster bomb in an area because of a suspected person who's maybe a terrorist, and of course it never hits the target exactly, and several men, women, and children are killed. But that seems to be okay. You know, it's part of the war on terror. We sort of apologize and then we move on. I cannot accept that. I'm not certain why our president is really, if he's giving the order, why he's not held accountable to that to the full extent of the law. And I know I may sound radical, but it just really bothers me that we can kill people because we have this legislation that we've passed that makes no sense whatsoever.
2 citations, Joe, to support your thesis, which I agree with entirely. If any of your listeners would get the Oxford Universal Dictionary or any reasonable dictionary and look up the word defense, you will see that what we are engaged in with forward presence in over 100 countries worldwide does not constitute defense. Aggression against other people is not defense. That reminds me of that guy, that murderer, McNamara, who talked about preemptive counterinsurgency,
Right.
where you kill them before they became communists.
Right.
The second thing is that great American political philosopher from the 1960s, Muhammad Ali. I remember in 1968, Muhammad Ali, no high school education, a boxer, said the most prophetic political thing that was said in the 60s. He looked in the camera and said, I'm going to try and quote him, "I ain't got no quarrel with no Viet Congs. None of them never called me nigger." And I thought, me too. I mean, that makes
That's right.
perfect sense to me.
I agree. Right.
I mean, why wasn't Muhammad Ali a congressman?
Right. He would have been one of our best congressmen. Rick, I think we have another call. We have a caller on the air? All right. We have a caller. You're on the air. What line are they on?
They're on line 3.
Line 3. Caller, you're on the air. Your first name, please, and your question for Mr. Rule.
Okay, Gary, and my question's to Rick Rule. Rick, do you think, and maybe I missed, some of the first part of the show, but do you think that there is a conspiracy of sorts to go to a cashless society by a group of bankers or by just different governments that want to control? That's basically my question. Is it a planned takeover of the economy, or is it just a bunch of greed being pulled by, different interests around the world, and that's what's going to happen?
Well, a conspiracy would suggest that it's some sort of secret. I think the government acknowledges that it would be very convenient for them in terms of extracting their pound of flesh if there were a global electronic currency. And I'm not sure I would characterize it as a conspiracy, but I'm certain that from the government's point of view, it would be both efficacious and convenient. So I suspect the ultimate answer is yes. I'm less enamored of this whole concept of broad-ranging conspiracies involving some cabal of bankers, and I don't buy into that very much. My own supposition is that it's above their pay grade. They can't educate the kids. They can't deliver the mail. And the idea that they could somehow conspire to rule the world isn't something I'm particularly concerned about. But I certainly believe that the government feels it in their interest to control something that is as vital to society as the medium of exchange. I equally believe that the citizens are more creative than the government, and that they'll ultimately fail, despite the fact that they'll make our life very inconvenient in the interim.
Okay. So you don't think it's an overall plan by some to just move it like, chess figures on a big game board?
No, I don't. I do believe that the U.S. government will continue to restrict our ability to transact freely because they'd like their piece of every transaction. And if that meets your definition of the big thinkers of Congress and the people that we elect conspiring to move us around on a checkerboard, then the answer is yes.
That's kind of arguable about big thinkers. Anyway, the other question would be then if they are wanting to just control, so they can tax. Do you think they'll be successful at that, or is it impossible to get people to give up cash?
I think they'll be unsuccessful. I think the emergence of Bitcoin, as an example, which has utility around the world for disguised anonymous transactions, will defeat the best intentions of the enemy in that regard.
Oh.
So it's going to be grassroots people that resist and come up with better ways, and that's really everybody being more of a independent thinker. That's going to be their biggest battle to control it. Correct?
Absolutely, and it'll be easier for the government to steal from you in other ways. My clients always ask me, "Is the government going to come and steal my IRA?" And I say, well, yes, indirectly. What they're going to do is artificially manipulate the interest rate down so that the yield on your IRA is less than it otherwise would have been. They won't overtly steal your savings. They'll covertly steal your savings by increasing the debt, that is the lack of utility that your sons and daughters will have later, by increasing your taxes, increasing your fees, increasing regulation, and by manipulating the interest rate to transfer wealth from you, the saver, to the spender, who constitutes the majority in a democratic society.
Well, this has been very helpful, and you're an excellent guest for the show, and I just enjoyed it this morning, and thank you for your answers. I feel a little better by understanding some of this about the future and about having an independent way of handling my future. So appreciate that, Rick.
A pleasure. Thank you.
Thank you very much for calling, Gary. Jim Ricketts, when he was senior counsel for long-term capital management, I remember the day when this happened. I think it was in 1998, and that whole system collapsed. Greenspan got together with the J.P. Morgans of this world and whatever to bail them out. And in that one instance, they suspected there could have been a collapse worldwide in the currency markets. Why don't we suspect that this could very easily happen again when things really aren't better? They're worse than they were before, especially when we tout the fact that our deficit this year will only be like $498 billion. Wow, I feel so much better now. Why wouldn't we feel almost guaranteed that this is going to happen in spades?
I have no answer to that one, Joe. I'm involved in financial markets every day.
Right.
And your sentiments are my sentiments completely. When I think about the events of 2008 and how close we came, and I think about whether or not any of the conditions precedent to the 2008 events have been addressed, I can't think of any, except perhaps the deflation in the home debt markets. But my own suspicion is, and it's just a suspicion, I'm a lender, I'm a credit analyst by nature, not an economist. But my suspicion is that the socialization of unfunded pension liabilities is probably the mortgage debt
right. Yeah.
of this decade. I remember, again, I'm not an economist, but I am a credit analyst. I remember in 2006 driving up the 405 freeway and seeing a big billboard, ironically, put up by a subsidiary of General Electric called Ditech Mortgage, that said, borrow 125% of the value of your home. Bad credit, okay. And I remember thinking, I'm not a real estate guy, but I don't think this is going to have a happy ending. And when I look at the incredible pension liabilities by big companies, by small companies, by federal, state, and local government, and these are defined benefit plans, not defined contribution plans, where the liability of the company, which ultimately, unfortunately, becomes the liability of society, is writ large.
Right.
And it seems to me that by consuming in anticipation of a pension that hasn't been funded, has the same economic impact as borrowing 125% of the already
right.
inflated value of your home.
Correct.
When you can't service the debt.
Right.
And Joe, I hope I'm wrong.
Right. No, I understand that. I completely agree. It just seems that people have lost their perspective of real money. Back in the old days, and I'm going back too far because I'm sure I'm older than you are. I tell everyone this. I say, you know what I used to do the day after Christmas? And people say, no, why would I know the day? I said, the first banking open day after Christmas was that I went to the bank and I opened up a Christmas club and I started saving for next year. And I used to put $10 away, and $120 I've had at the end of the after 1 year, took the $120 and I bought the presents, and that was it. Today that doesn't exist, and this whole world is awash in debt. I don't see a happy ending. I wish I can see some sort of happy ending. I just don't see it. Am I just a negative person or something like that? I mean, or am I unrealistic?
Well, I would draw your attention to some very hopeful signs. In emerging and frontier markets on a global basis, those people are becoming slowly more free. Slowly.
Correct.
Which means they're becoming rapidly more rich.
Right.
Here in the United States, when I first understood that I was a libertarian, if you will, when I came out, Murray Rothbard used to say, well, the problem with the movement is there's 12 of us. Now there's
right.
one organization,
yes.
Students for Liberty, started 8 years ago with 10 kids. They have almost 140,000 kids worldwide.
Right.
The point of view that you and I share is growing much more rapidly than people understand.
Okay.
And the generation that is 2 generations between you and I, below you and I, pardon me, is substantially more libertarian, substantially more free market oriented
right.
Than our own generation was. I participate online at something called liberty.me, which is a platform for many libertarian and free market organizations. And the median age of the participants, the real participants, the people who drive liberty.me, has got to be sub 30.
Right.
And that's extremely attractive to me.
Right. Right.
The growing sense among young people that the path that you and I have set for them is unsustainable, that realization is spectacular, and it's growing, not shrinking.
Well, yes, I was down in Austin about a month ago with Ron Paul, Jacob Hornberger, Greenwald, and Balco, and then it really was a fabulous conference. And with the students, was it the Students of Liberty, or I'm sorry, it was a student group for Liberty, and I'm sorry, I can't think of the name. I'm going to stutter for a half hour before I get it out of my mouth, so I'll keep my mouth shut on that. And it was very, very encouraging. I mean, it was worth the 7-hour drive to go down there and listen to him, and then just drive back again. It was really worth it, and it did give me some hope in that there are so many young students who are making an attempt to foster the thinking of our forefathers, basically of where we were and why we should bring it back. And they do have the answers where most other people have a lot of ideology, which we're sick of. I mean, the world is becoming sick of ideology.
And they're going to do better than our forefathers, Joe. Remember,
Yes.
our forefathers incorporated slavery as an example.
That's right.
The young people at Students for Liberty that I talk to, well, I think that the Bill of Rights and the U.S. Constitution were probably the best political documents ever written.
Right.
These young people are questioning that. They want to see a society that's much more contractually and voluntarily based. They don't want to be constrained by the Constitution.
Right. Good point.
They're going to teach us, Joe. It's not going to be easy, but they're going to teach us.
Yeah. Rick, we are about out of time. I'd like to give the last minute over to you so you can tell our listeners about your organization and any other closing comments that you might have, please.
Sprott is a Canadian domiciled and listed investment manager with operations around the world. We manage or administer about $10 billion. Our primary focus is natural resource and precious metals. We service about 250,000 investors worldwide. We operate as resource stock brokers, we operate as investment managers, and we operate passive products, including 2 exchange-traded funds on the New York Stock Exchange, low-cost ways to own gold stock under our stewardship. We also operate the Sprott physical gold, physical silver, and physical platinum and palladium trusts on the New York Stock Exchange, which we believe are the finest investment vehicles for American investors to hold precious metals. We, as you can tell from the foregoing message, are fairly strongly free market oriented throughout the organization around the world. And we really encourage the proliferation of free market thinking and free market outlets like the one that you've had the pleasure of listening to today. Thank you, Joe.
Right. It's a tremendous interview. It was a real pleasure meeting you. This is the very first time you've been on our show. I hope you will accept our invitation to return at a later date.
Being among friends is always a pleasure. I look forward to it.
Thank you so much, Rick. Thank you so much for
Pleasure.
Appreciate it.
Thank you.
This is the end of today's broadcast. We'd like to thank our sponsors for the financial support. We'd like to thank you for listening in. You can further the cause of liberty by recommending this program to your friends and let us hear from you. Our email address is comments@libertytalkradio.com. Remember, folks, you're either allowing your liberties to be taken away or you're striving to protect them. Unfortunately, there is no middle ground. Until next time, this is Joe Cristiano, Liberty Talk Radio. Stay well, stay tuned.